Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Tesla and we're going to be starting with our Elliott wave analysis first and our basic technical analysis second. I'm also going to be sharing a separate count to this one, which I'm going to quickly run you through on a naked chart just as an alternative, a simple explanation of an alternative. Now, it's been a while since we covered Tesla on the channel. The last video was a Patreon exclusive, so YouTube missed out on that one. And I think it was the 14th of April. But if you go back and watch it, just to recap, I was talking about how we'd seen 5 waves down here, and I was expecting to see 3 waves up conclude somewhere around one of these two levels. We were roughly here during that video, and I was expecting to see a reaction up at 61.8. We went through it slightly to the one-to-one parity of what is the W, the X to the Y. I had this as an ABC at the time because of the way it was counting. I picked out a secondary level that it could go to, but I was expecting to see 3 waves back and then a reaction. Well, sure enough, we've had 3 waves back and we've had a reaction downwards. This is what I was expecting. An initial move down, a 3-wave move back, and then a continuation of the bearish trend lower. So yes, I'm still bearish on Tesla, and so far since that video we have been going down for a couple of weeks. Now the issue here is, yes, I saw this 3-wave move back, and yes, I got in short during this move. I shared how I set up that trade with my Patreon subscribers. The thing is, since this 3-wave move back, it has not developed downwards in the way one would typically expect, is the best way I can describe it. In other words, rather than getting a nice clean impulse off of this 3-wave retracement, we've got something a lot messier. Now, let's keep things really simple. One thing I think we can say quite safely at the moment is this does not look very impulsive. Okay, so the bullish idea that we bottomed here and are going higher, I'm not buying that, because it just doesn't look right. We know we don't have the right wave structure. It does look corrective. It's trading inside of this channel, which is being set up with the low here and the swing to this low here, placed onto this high here to project the next high, and potentially the next low, which we're going to discuss. Now, this looks corrective to me. Impulsive down 5 waves, 3 waves back, and now we're coming back down. So let's just run through the count on a shorter time frame here. Let's come down to the 1 hour, and I'll show you the problems I'm having, and why I'm having to approach this a bit cautiously, because it's quite tricky to count. Our one-to-one parity on the primary time frame of the A projected from the B brings us all the way down into this area here in the mid 300s to the mid 400s. If I just tell you what we'll do, we'll get that one-to-one parity set up while we're here. Okay, so it splits the diff at 404. So let's just pop it in the middle, delete that, and we'll say 100% parity, we'll call this. 100% parity. A equals C. There you go. So we're looking to get down here in a C in 5 ways. So we've got an A, B, C zigzag, big cyclical correction, bringing us down to complete in all this. Well, if you look back here, back into this prior wave 4, into some of this volume here around this point of control, around the 61.8% overall retracement, around the one-to-one parity. There's definite support down here. Between the 50 and the 61.8, which is the blue line and the yellow line, we've got this big node of volume. It looks like a very obvious place to complete, and we would complete at parity. So that's all groovy. I like that. I like that we came down in 5, back in 3, and had a reaction. I like that. Predicted that pretty much to the tick, and it worked out well. But I don't like how we're counting down. Now, it might just be my own limitations here, given the time I've had to consume the count to figure this out. But after getting a 3-wave move up into the yellow zone here and the one-to-one parity, we get this violent reaction down, and I can make out 5 waves down. Here, 1, 2, 3, 4 with an overlap, 5. The 3 is not the shortest, but the 4 does overlap the 1, so we're dealing with a diagonal. Now, it's an expanding diagonal, expanding leading diagonal to be precise. And then we get a 3 wave move into an A, a 3 wave move into the B, and then a 1, 2, 3, 4, 5 wave move into the C to complete our A, B, C into our minor 2. So we've got 5 waves minor 1, A, B, C minor 2. I like this setup and added to the short again here. But I got a little lower than that. I actually got on the next retracement because I wanted to be sure. So we had a move here and a move here, shorted here, which I also shared with the guys on the Discord from my patrons. So then we come down in another 5 wave move, right? Okay, so we've got to think this is a wave of lesser degree. This next wave, 1, 2, 3, 4, 5. Brilliant. 3 waves back again, trading the usual 5 down, 3 back, 5 up, 3 back, whatever, depending on the trend. Potential to add here, didn't. I wasn't comfortable with whether or not this was a continuation of this sideways correction. Then we saw this gap down here. Now at this point, we've got to say, well, if we're calling this minute degree and we're calling this minute degree into minor degree, then we've got to get a long minor 3 in here at some point in order to get down to parity. So I've got that all the way down here. Now these are just random projections based off a couple of Fibonacci extensions, so we can't read into them yet because we've got to get the wave structure to support it. So here on 1, 2, 3, 4, 5, 3, 4, 5, and this would be sub minuet. This would be okay. So we get ourselves down into another 1, 2 to get our extension into our 3, and then we get another 5 wave move down. So I can't call this minute or minuet, as I already used a 1, 2 minuet here. And sub minuet, this should be the 1, 2 of the sub minuet. So we've got to go micro on this now, which I never do. So 3, 4, 5. So you can see the problem I'm getting here is I'm just getting, this 1, 2, 1, 2, 1, 2, 1, 2, 1, 2 building up. Yes, it's possible that we're just building a huge extension in the 3 to flush down violently. But it's not yeah, we're getting a series of impulsive waves, but it could be countered a lot easier than this, which would be the continuation of a correction. So we're going to talk about that in a minute. The other thing I wanted to point out here was we've come down to challenge the bottom of this channel. And as I speak to you now, this may well be different by the time you watch this video. We've come down to the bottom of the fib channel, right? And we've desperately tried to cling on to this. Like, our lives depend on it. We do not want to give up this level. The market does not want to give up this level. And we've been pinging along the bottom of it. And now we've just broken back above it. Now, it could be, once again, a completion of 5 waves down, right? And this could be the start of 3 waves back again into another 1, 2. And then this was 1, 2 micro, 1, 2 sub minuet, then into 3, 4 minuet, 5, 3 minute, so on and so forth, all the way down to the minor 3. So we could just be building a giant extension as we continue to head lower. Excuse me. So that's one way of looking at it. This is the continued bearish way of looking at it, that we're impulsing down, we're just building impulse wave correction, impulse wave correction, impulse wave, and as we do it, we're building up waves of lesser degree, from minor to minute to minuet to sub minuet, so on and so forth, building up those 1, 2s of the huge minor 3 down here. So in order for this to continue, we need to see an actual acceleration into this minute level 3. We need to see this fib channel break, and then we need to see, after we've had a 5 wave move here, we need to see some kind of corrective move, and then we really do need to get going, like, properly, and accelerating this 3. We can't just keep going 1, 2 forever and start drifting sideways. That's just going to cancel itself out. Time the progress of time will wipe that out and cancel that out. So we just need to see an actual movement that either cancels it out. So we bounce from the bottom of this fib channel and we just come back up to challenge this high. We cancel out this low here, which is a minor wave 1. Well, we take out the minute 1 here, then we take out the minor 1, minute 1, so on and so forth, and we just turn all of this idea into nonsense. Okay, and then we have to look at another move higher as part of a greater corrective move before going lower. So we want to see the break of this fib channel, we want to see an acceleration to the downside if the bearish idea, which I've been supporting all the time, is correct. Now so far, 5 back down, 3 back, it's been spot on. It's just messy getting going. Sometimes it's like that. If you're building an extension, you don't get nice clean impulse waves sometimes at the start. It can be a bit misleading, and it has been a bit of a tricky count from the reaction we've had here. So what we're going to do now is we're just going to consider a couple of alternatives, and we're going to do that by making a copy, Tesla copy, alternates. Okay. And what we're going to do here is we're just going to delete all of the mess so I can explain things really simply. So here's an alternative to you. We're going to just strip it down to the naked count here. We're going to go 1, 2, 3, 4, 5, no overlap. Nice clean impulse wave down, impulse wave down. We like this. This is setting the trend for the bearish trend for everything to continue down lower. So this gives us our A down here, looking for our B, which we're saying is here, looking for our C, it's down at 404-ish over there. Right, so this is our basic count simplified, and then we're going to look at other ways of interpreting it. Okay, so now what I find interesting, you'll notice I've repositioned the fib channel. I wanted to do this on a fresh chart because of all the counts in the way here, it's tricky to see. So I've taken the low here and this low here and dragged up to this high here. So the 5th of March low, connected it to the 30th March low, dragged it up and projected it from the 10th of March high. That's how I got that fib channel. This fib channel, I've taken the highs and dragged them down. And you can see how we get this low, and now the clinging on to the bottom here that I was talking about, you see how we're below it on this fib channel setting, but we're just above it. This makes more sense, that we've come down, tested support, found it, and are now coming back up. So I prefer this fib channel setup now. So what I'm going to do is I'm just going to lock this in place, and we're just going to save a chart as we make a little bit of progress. Now this video might be a little longer than usual because I'm having to do a little bit of live work. So here's an alternative I want to share with you. We get a free wave move here. We get a free wave move here. We get a free wave move here. And instead of trying to force this into multiple subdegrees of an impulse wave, we get a free wave move here, diagonal in an A, ABC into a B, impulse in the C. Right? That's how we could call it. We could say A, B, C, zigzag. Right? And it's pretty clean. We'll leave it on minute degree. And we got a zigzag here as well. 5 waves, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. So this was a zigzag. I still don't know what that is. I think it's a WXY of some sort. It's a mess, but it's definitely 3 waves and not 5 waves. So what that means is, having potentially identified this as a diagonal A, B, C, so a zigzag here and a zigzag here, what if this fib channel is not done doing its work yet and the B's not in, and we get a deeper retracement for Tesla? We still got 5 waves down, so this is still a bearish count. It's just considering the possibility of a higher finishing position prior to the previous high. Now obviously the invalidation point for any bearish count is the previous high. We can't ignore that. Any breach of this high, we cannot have 5 waves down from the top and consider it to be a bearish move if this high gets taken out, because we're saying we're saying 5 waves is setting the trend. Okay, so we're looking for a zigzag. Now if we had 3 waves down, we could say 3 waves into an A, down here, and then we could say 3 waves into an expanding B above the previous high, and there would be room for that, but we're not. We've identified 5 waves down, so we are talking about a zigzag. End of story. We cannot come back above this high, and that's just the rule. So that's 899. It's 900. Let's just call it 900. Okay, so let's pop that line's in place now. Let's leave that there. So how do we get up higher? We've got 3 waves here, we've got 3 waves here and 3 waves here, so that's our WXY. We could be in a triple combination, not a WXY, but a W, X, Y, X, Z, like this. And we could be in a triple combo, like this, to find our B. They're pretty rare, but this, to me, I'm not saying I'm supporting this idea yet, it's an alternative. It's just the problem with this move is it's not looking clean and impulsive enough to convince me that the correction's over. Now, like I said a moment ago, a break through this fib channel and an acceleration below it, I'd be convinced, right, yeah, we're bearish, we're going lower. Any significant retracement after this move down should be shorted further. But if we bounce from this fib channel here and we start climbing back up through the median line here and pushing to new highs, then we have to say this is the most viable option. Now, here's what the bulls are going to try and say, and I don't blame them for trying to say it. They're going to say 1, 2, bump, 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 and then they're going to say 1, 2, okay, of a wave of lesser degree, obviously. So this is the way you would have to convince yourself to look at this bullishly, that you've just gone, you've got to count this as 3. Somehow you've got to count this move down as 3 waves. Maybe you could convince yourself this is a zigzag. I'm not having a go at anyone who does. I'm simply saying it looks like 5 waves to me all day, guys. I'm just saying that. And 5 waves down from a high is a trend. 5 waves up from a low is a trend. Okay, so for me the trend is set and we're going lower, but if you were a bull you'd have to convince yourself that this was 5 waves, this is 3 waves, you'd have to convince yourself that this potential 3 wave move was also 5 waves, and then this is 3 waves, and we're going 1, 2, 1, 2, 3 off to new highs. Now if we break to new highs in the next few weeks, I will hold my hands up and say the bulls were right and I fucked up here somehow. But for the moment I have predicted 5 waves down and 3 waves back and a reaction, and we've got it. I'm just not sold on the reaction, that's all it is. So this is my preferred alternative count. 1 more 3 wave move higher to get the Z of the B, and then you're into A, B, then you can have your C and come down. But now the C obviously would likely in this case 1 to 1 would probably bring it to back to where the A was, but I would expect an extension under these circumstances, and for have a longer C with a deep zigzag like this. There'd even be the argument, if you get such a deep retracement, that you're not looking at a B but you're looking at a 1 and a 2, and then holy hell, it's going to be a lot worse if that turns out to be the case, because you got to put in 5 waves before you find the A. Now that would be a total collapse. We'd be looking at 90% sell-off, or well, equivalent to 90% sell-off of the whole of the price of Tesla. So a deeper retracement isn't necessarily a good thing for the bulls. It could be bad news. It could be a 1-2 rather than an ABC. But I'm going to support the idea that it's an ABC. Now we say 3 waves back, but even though this is a triple combination and you've got all these waves moving, it still counts as 3 waves. It's a corrective move, A, B, C. So there you go, guys. That's my alternative idea. A move violently off the bottom of this fib channel, taking out these previous lows, would probably have me thinking that this was correct. I'd want to see 5 waves up, 3 waves back, and then I'd be thinking, yes, it's a zigzag to complete this WXYXZ pattern. And then I'd have to be more patient and wait to short from a higher position, which is not a bad thing. Greater margin of safety. Now up here we've got the 78.6. This is a potential area to short from. This is on my initial chart here, 78.6, and 23 1.6% extension of the B, as it was written here. So that's a potential area there. That's still on my initial chart at 823.60. So I'm going to leave the Elliott wave count there, as I think I've talked enough about it now. And we're going to wrap things up with our basic technical analysis, and we might as well do it here since we've got minimal count on the chart. So we're just going to come out to the weekly and auto the thing. Okay, and then we're going to bring up our moving averages. So we have a 10 in yellow, 20 in blue, 60 in orange, and 250 in green. Excuse me. And bring up our indicators. Shrink them down a little bit. Alright, so we also have, in addition to our exponential moving averages, we have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short term moving average in blue and 20 for the long term moving average in orange. Our volume profile on the right hand side showing the various peaks and troughs of the buy sell volume, with the extreme of which being marked by a yellow dashed line, which is our point of control. What can we see on the weekly time frame? After a free wave move up above the 10 and the 20 exponential moving average, we have during today's trading session this week so far come down to test the 20, and we are currently bodying the candle at the close in post market on the 20, ever so slightly below it, you could argue, but we've basically come down to test its support, which coincides with this high rising trend line, which of course represents our channel we've been watching. So there is support at this candle low of the wick. There is support at the body with the moving average. It's probably why we've settled here for the day. So below the 10 though at the moment. We've moved down from overbought conditions into neutral territory, but we've kind of stayed there during this correction. We have not moved back up into overbought, but we haven't collapsed to oversold. Now, excuse me, having reached extreme levels of overbought on the weekly time frame in the RSI, I would, given the count I've got here, 5 waves down and a completion of a major top, I would expect to see a full flush down into deeply oversold territory, and we are nowhere near it yet. Nowhere near it. So this supports the idea that no matter how much higher we go up, we need to come down. Don't need to, but I would expect us to come down and go from overbought to oversold. I've spoken about this multiple times in multiple videos. When you get these large wave degree completions, to go from one extreme to the other is so common. You see it frequently. Okay, it's uncommon to not see it, and that's why I sometimes point it out when it doesn't happen, because that would be quite rare. We are talking about a major wave degree completion here, so from overbought to oversold would make sense. MACD, we've had bearish momentum obviously in this initial move down. We've had it die off somewhat, but that short-term moving average, even with this move up, has failed to cross over the long-term moving average and become truly bullish. And we've got a slightly darker red bar in a histogram for the week. So, excuse me, as it looks at the moment, this supports the initial bearish idea of continued extending waves into a 3 as we break down lower, but we'd have to see follow through with the price action during the rest of the week and the momentum supporting it. Let's come down to the daily time frame. On the daily time frame, things look a little more bearish. We are through. We are trading below the 10, the 20, and the 60 exponential moving average. The 10, as I speak, closed crossing through the 60 today. So if we get a 60, if we get the 10 and the 60 tomorrow, sorry, the 10 and the 20 through the 60 exponential moving average tomorrow, with a price close below it and the flush down to support the idea of this extending bearish pattern of building an impulse wave lower, then I'd be much more in favour of the more aggressively bearish argument that we're going to break down from here. If we pop and gap up tomorrow when we get some kind of crazy post-market movement or pre-market move, and we avoid this crossover and we close with the price above those moving averages, you could argue the opposite. For the meantime, though, it looks a bit more bearish, to be absolutely honest. Moving averages rolling over, 60s rolling over. We did almost make it back up into overbought conditions on the daily time frame, but we're now heading lower into neutral territory, not quite into oversold yet. So further flush down to try and find oversold on the daily time frame would support a move into that wave 3 potentially, but we need to see it supported by momentum, and we need to see the price action reflect that. So crossover short term over the long term moving average, building bearish momentum here. So it's all to play for at the moment. We've had our 5-wave move down, a 3-wave move back, and this could be the start of a collapse much lower. But if, and I say if we do see a real significant bounce, and we have got quite a bullish, I think it's that bullish hammer, looking at today's close, because the body of the candle, if we take the length of the wick is more than double the body of the candle. So you could call this a hammer. So if we do get follow through to the upside after this hammer candle tomorrow, and we start to turn this momentum over to the bullish side, and we get a crossover in the short term on the daily, and we close above these moving averages, then the idea that this is a WXYXZ, and we've got another high to make up here, still below the all-time high, then you can start supporting that idea. But for the moment, I'm going to stick with my initial count that we're building up a bearish wave downward, but we just got to keep that alternative in our mind. Alright then guys, that's where I'm going to leave it. Thank you for joining us on this technical analysis and Elliott wave analysis of Tesla. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. Thank you once again to my patrons. Your support is greatly appreciated. Glad to see some new people coming on board this month. If you are interested in joining, you get a lot of benefits. For example, the patrons tomorrow will be getting a exclusive silver video for SLV, which won't be available on YouTube this week. If you want to see it, head over, have a look at the tiers, see if you want to sign up. There's a link in the description box below, as there is also a link to my Twitter feed as well. If you're not following me yet, please do. Take care guys, and I will be back with you again soon. All the best. Bye bye.